Good morning, all. Please introduce yourselves. Tell us where you are speaking from. Give us about a minute of what your company does. Also, let us know what a good lead is for you. I will introduce you by name, and I'll introduce you the way I see you on my screen. Mr. David Garrison, and if you are not the speaker, could you mute, please? David Garrison.
Good morning, I'm Dave Garrison. I'm with Mutual of Omaha Mortgage, and I work in the reverse mortgage business, which means I work with wealth advisors, CPAs, wealth attorneys, and their age 62 and over clients, and utilizing housing wealth to create a number of outcomes. Could be reducing risk in their portfolio, could be improving cash flow, could be preserving assets, or could be purchasing a home. Dave Garrison, Mutual of Omaha Mortgage, and I'm near Martinsville, Indiana.
Thank you, David. Nick Sullivan, please.
Good morning, everyone. Nick Sullivan, Business Solutions. I help business owners improve cash flow and profitability by identifying specialized federal programs and cost reduction opportunities. Met with a restaurant owner yesterday, has 40 employees. He has a potential of $300,000 in employee retention credits. I have a follow-up appointment with a contractor that has 70 employees, potential of $1 million in employee retention credits, plus another $100,000 in dollars potentially for his property that he owns. I use a software that takes about 5 minutes to identify these opportunities, and a team of experts works with our clients to capture them. A good referral this week are restaurants. I'll put a link in from the National Restaurant Association that talks about some of these credits. So we have a restaurant, they all need some extra cash. Keep that in mind. Nick Sullivan, Sullivan Business Solutions.
Thank you, Nick. Linda B.
Thank you, Keith. I'm Linda B. with Medicare Resource Center. I am a licensed insurance agent specializing in Medicare. My focus this year is on businesses medium size to under 20. Under 20 businesses does not have access to group health after they turn 65. So I am really not in sales as much as I am a service to them to narrow down their choices when they turn 65 and they're getting ready to go through the whole process of Medicare. Linda B., Medicare Resource Center.
Thank you, Linda. Gerald, please. Gerald Cowan.
Good morning, everybody. Jerry Cowan, Indianapolis, Fishers, Noblesville, Carmel, all over Indiana. I'm licensed to practice law. A good referral for me would be a situation where someone passed away and there's total confusion as to how to handle their personal affairs, how to handle the bills, how to handle all kinds of issues that arise in a situation like that. Another good referral would be a terrible wrongful death or serious injury case where someone deserves adequate compensation for all their trouble. Again, I'm near Indianapolis. Gerald Cowan, thank you for listening.
Thank you, Gerald. Gloria Thomas, please.
Good morning, Gloria Thomas from Columbus, Ohio. I'm with Secret Direct. We help people look better, feel better, and experience the world. We look better with minerals from the Dead Sea, feel better with organic, natural nutrition, and experience the world through Club Secret. Right now, everything's opening up or beginning to open up. We just got back from fantastic trips that we were gone for 2 weeks and a week before that. So looking for anybody who wanted to travel right now. Again, Gloria Thomas with Secret Direct.
Thank you, Gloria. Rhoda, please.
Good morning, all, from right here in Indianapolis, Indiana. My team and I say it for you, write what you read when you go on our clients' websites. And all of you may not come in contact with someone who says, I need to blog. But I'm going to bet that all of you do come in contact with someone who says they are a web designer or they are a web marketer. And it turns out that blogging is actually the hardest piece to sustain for a marketing company because it takes the most work over the longest period of time, very, very time consuming and skill necessary. So when you meet someone who says they are a web designer, even if they're doing Facebook and LinkedIn and all these things for their clients, they're probably not providing ongoing months, weeks, years long content for their readers to know how unique they are. So that's where you want to recommend Say It For You B, which is my agency focused writing team. We say it for you.
Thank you, Rhoda. Zach Fox, please.
Good morning, everyone. Zach Fox, Edward Jones Investments. I'm sorry for the background noise here. We're at a local coffee shop, but I am with Edward Jones Investments, helping personal investment strategy as well as business strategy. I'll toot my own horn for a quick minute here. Had a real good conversation last night with the 57-year-old lady able to retire when she's ready. So that was pretty cool. And most of you may know already, but sorry, I'm getting a little feedback there. Most of you may know already that this year is a Department of Labor restatement year for your 401k plans. So what that means is your third-party administrator is going to be charging you somewhere between $1,200 and $3,000 to reevaluate the plan they were supposed to write. So if you know of a business that is interested to get that service, to dig into your fees and your performance at no charge, I'm willing to do that. So that's what's going on. So all I need for that is a 408B2 document, and we can dig into it for you. So a good referral for me right now is somebody willing to reevaluate their 401k plan. I'm licensed in Indiana, Ohio, Michigan, Illinois, and Florida.
Thank you, Zach. Mr. John Vandersall.
Thank you, Keith. Good morning from Indianapolis. I'm John Vandersall, residential real estate agent with the FC Tucker Company. I office out of the Keystone and the Crossing branch. I live in Broad Ripple, and I service Marion County and surrounding areas. I work with buyers and sellers and a few investors sprinkled in there. Quick fun story from the last week. So inventories do remain historically low. We have about half as many homes on the market today as we did this time last year. And I was able to help one buyer gain a accepted offer last week. He was one of 21 offers on a house, one of 21, and sight unseen. He didn't walk through the home before he bought it. I haven't been through the home, but we had an inspection this week, and it meets his needs. So we're moving forward. Today, I give you an idea. Today, there's a new condo coming for sale in the Arbors in Lawrence. It's a 2-bed, 2-bath. I think they were built in the late 70s, and one owner, all original. So it needs an investor who's going to do a little bit more than paint and carpet, maybe redo the bathrooms and kitchen, but interesting investment opportunity there. Anyway, for all your real estate needs, talk to Tucker and call Vandersall.
Thank you, John. Adele, please.
Well, good morning, everybody. I'm Adele Bush. My business is ASB Business Services, LLC, and we're coming to you live from Columbus, Ohio. My business specializes in personalized, customized, and exclusive executive telephone outreach. We also do business research and prospect development. Our calls always focus on business development, never telemarketing. And I have a quick story to tell you. Last week, I was asked to make a phone call for a client who had been trying to reach and communicate with someone over some money that was owed to them. And this person was not successful. So he came to me. We talked about it. I got a little bit of history. We put a plan together, and I hired a translator because this person there was a language barrier. And that's why the client wasn't able to communicate. So we hired a Spanish-speaking interpreter. He was right behind me on the call, and we got what we wanted. He apologized profusely for not paying sooner. So that's just a small incident about what we can do. we can do much more than that for your business. Adele Bush with ASB Business Services. One call does it all. Thank you.
Thank you, Adele. Jim Shepard, please.
Good morning. I'm on the northeast side of Indianapolis this morning, a rainy morning and without internet service. So this is my first time doing it on my telephone and not my iPad or computer. So I don't know what you're seeing or if you're even seeing me. Not able to get the full screen of everyone that's on the call. So, but I am retired, a longtime CBN member, and always look forward to when I can attending Keith's meetings here. Thank you so much.
Thank you, Jim. Okay. Hey, thanks all you guys for showing up today. And with that, let me reintroduce our speaker. It's Doug Peacock. He'll introduce himself and his topic. Doug, you should have the floor. You also have control of the screen.
Awesome. Thanks, Keith. I'm going to delay going to that screen for just a moment. I do have to thank Keith that he took the extra time to walk me through some technology. I will tell you, as a former football coach, me and technology just did not see eye to eye most of the time. And I'm learning, and it's a little different, I promise. But I appreciate Keith's extra effort this morning to get me through that. I also have to thank Rhoda for the invitation. Met her at a networking event, and she started answering some questions like she had been there before when I started talking to her. And an amazing woman, Rhoda. I look forward to seeing you again, and I thank you for the opportunity to do this. Back to me, I will disclaim I am not a tax professional. I am not a certified financial planner. I am not a lawyer. I'm simply an old football coach and teacher who can read, though. And I just wanted to share some things that I have been doing. When I tried to retire from teaching in Indiana, I found out it wasn't going to go exactly as I planned. And I found out that's a common denominator for a lot of us. So I looked into some other things. I also saw that my students, my former students who had gone on to college, whether to play football or not, didn't really matter, but all of them were saddled with these student loan debts. And so I literally talked to a man out of Birmingham, Alabama named Nelson Nash. And if you want to, there's this thing out there called Google. I think it's going to hang around. I don't think it's a fad. I think it's going to be around for a while. But that's where I got my introduction to everything that you're going to see today. It is a extremely different way of thinking. Some of you, I told Keith before we started, head slaps were legal when I played. So maybe I'm the kook, maybe I'm the crazy one. But I do want to introduce you into some things, some different ways to think, and we'll talk a little bit about that. Keith, I do want to give you another kudo for starting on time. As a football coach, we always started on time. In fact, if you were on time, you were probably late. For those of you that are habitually late, you're just practicing quitting anyway. So let me help you, okay? So we're going to try this and see if we can get into some stuff. Okay, so the thing I come to talk to you about today is infinite banking. I had never heard of this. It was totally, in fact, I will tell you, honestly, the first time I heard it, I thought these people were going to jail. And there's no way this can be legal. There's no way this can happen. I will give you that's my cell number. That is also my email. Please understand, I would have never done this in a school. You ain't getting my phone number or my email if you were one of my students in school. But that is me. I will answer that phone. Just give me some time and I will get to you. Guys, here's where I want to start. The problem isn't so much what Americans don't know. The problem is what they think they know that just ain't so. And that's Will Rogers. I call it conditioned thinking. We've been taught so many things, and regardless of where it come from, it's just not true. And I'm going to attack some of those things today. Please understand, I understand that people don't like change. I want to get you to think. And if I can get you to think differently, then particularly today about money, your economy, and your future, you're going to hear some things that you've never heard before. And I'm okay with that. You know, again, maybe I'm the kook, but this has been used for centuries. And for some reason, we don't teach it in our schools, and we don't, I mean, I didn't get any of this. So I want you to know that what you believe may or may not be true. In fact, one of the guys I first heard talk asked me that if what you thought was true about your money wasn't true about your money, when would you want to know? And the true answer to that is 50 years ago, but that's not an option at this point. So I guess today is going to have to do. Maybe I can start your trip with that today. Okay. I do believe that wealth is under attack today in the United States. I do believe that we're in the middle of a failed financial experiment that shifted the responsibility of your pension or your retirement from the employer to employees. We call them qualified accounts, 401ks, 403bs, IRA, and guys, we'll talk a lot about that in just a moment. But if Fortune 500 companies can't do that, what makes you think your employees can? And it's hanging people out. Today's financial industry teaches you to pull money out of your business, to build your net worth, to invest in other people's business and other people's dreams rather than your own. Guys, that every time you do that, it suppresses the value of your business, your cash flow potential, and your sole purpose, why you were put here. I will tell you unequivocally, the best investment that you can make is in yourself. You understand your business better than anybody else on this planet. And so use that. Qualified plans, think about these. And these are some of the questions I generally ask people. Why would you provide all the money, take all the risks, pay all the fees, even on the government's part, put your money in what I call IRS prison for 80% of your lifetime with only 12 years without a penalty? There is a much, much better way. Infinite banking strategy. I usually call it just IBS, and then I realize that stands for something else also. So some of the things that we talk about today may cause some digestive distress, but it's not that IBS. Got no intentions of going there. The infinite banking strategy is simply to grow money safely, predictably, and legally off the radar screen of the IRS for use now and in the future. When I heard this is where I got nervous and thought they were going to jail. Then I found out it's been done for centuries. Don't try to make this something it's not. This is not an investment. It's not truly even a product, but it is a strategy. It's a strategy to warehouse wealth, money, while you are waiting for the next opportunity to put it to work somewhere else. Here's the crazy part. At the same time, if you do this right, you could literally use money in two different places at the same time. I'm going to tell you a little story about a magic coffee machine. I bought a coffee machine for about $100, but then it started giving me thousands of dollars. The magic coffee machine gave me a cup of coffee for $1. So I put in $1, it gives me a cup of coffee. Then the magic happens. It gave me 25 cents back. I'm going, that's a pretty good deal. The next day I put my $1 in, I get my cup of coffee, and it gives me 26 cents back. Now, head slaps were legal, but I'm telling you what, mama didn't raise no fool. How many of y'all think I'm buying a cup of coffee the next day? You're right. Please understand, I'm going to do that forever because the day is coming when it's going to give me my $1 back. And then the day is coming where it's going to give me more than my dollar back, $2, $3, then much, much more. And so there's always one guy says, but I don't like coffee. Please understand, you missed the point. Okay. Are you really just buying a cup of coffee at this point? How many of you would spend $1 today, even if you don't like or need coffee, just so you could find the hidden dollars later? That's the point. This is exactly how the infinite banking system works. For every dollar you put in, you will temporarily lose use of some of that money until someday you will get to use all of that money and eventually more money than you put in for your use. Guys, and that's for whatever you determine to use it for, and we'll talk about that later. Almost everyone can own their own magic coffee machine. Is it worth talking about? And that's literally a 50,000 foot overview, if you will, of what we do. Any asset can work. You can use real estate. You can use cash. You can use cryptocurrency and Bitcoin or whatever, gold, silver, or you can be grandma and grandpa and use a mattress, a shoebox in the closet, or a mason jar out back. I will tell you my favorite is life insurance. And I'm going to lose some of you right here because some of y'all's conditioned thinking says there's no way, I'm running, get me out of here, I'm gone. And have it, I understand that, have at it. But I want you to understand, if what you thought was true isn't true, when would you want to know? Why life insurance? It's the only one guaranteed to grow. How are y'all going to run a bank with an asset that loses money? It's guaranteed to grow next year, more next year than it did this year. Please understand, this is not our grandparents' life insurance. It is a whole life insurance policy specially designed for maximum cash value, low commissions, with a very old mutual life insurance company. It must be a mutual company. And I don't want to get real deep in the weeds here, but that is critical. If you can't accept that this is something you didn't know, then I'm not your guy. I'm not, if you can't get over the word life insurance, which a lot of people can't, okay, then I'm not your guy. Another concept that you're going to have to learn, and most of you know this because I think you've been in business long enough, you finance everything you buy, and there's no exceptions to that. Every money decision that you make is a financing decision. You will either pay interest or you give up interest. We all know the pain of borrowing money from a bank and paying interest back to the bank and then feel like we've lost that money, right? Few people talk to you about the interest that you lose, however. And this is my cash buyers. Please understand, you not only lose that dollar, but you also lose every dollar that dollar could have earned you. It's called lost opportunity cost. What if you could recoup some of that interest? What if you never had to lose or give up another dollar of earnings? What if you could literally act like a bank? What a concept, right? Lost opportunity cost is mostly unknown to us, except for a few accountants that I've run across. The problem is it's permanent. It is forever, and once it is, you cannot get it back. Do the math. They are staggering large numbers because of time. Guys, a little bit of money over a long period of time equals a lot of money. And that's what we're talking about. I'm going to give you a real quick example here, and please understand this is only example just so we can see and learn. A $30,000 car will literally cost you $129,000 in lost opportunity cost in 30 years. And that's going through and financing, and that's a whole nother lesson. But guys, that's a $99,000 difference. If you could recoup, if I could recoup just some of that 99, would you want to? Now, please understand, that's got my attention. Okay? Here's the problem. What if you buy more than one car? What if you live longer than 30 years? See how this is going to change? These numbers are huge. And when you throw them out, people get glossy-eyed because they never thought they could find that much money. Please understand, with lost opportunity cost, every time you lose a dollar, you not only lose that dollar, but every dollar it would have ever earned for you. There is a huge ripple effect forever. Infinite banking allows uninterrupted compound interest on your money and still have money available to buy what you need today. Guys, if you get this, you're going to learn how to use money in two places at the same time. And that's truly my goal. I never thought that was possible. Here's the review. If you miss everything I've talked about, get this. You can save money with a guaranteed lifetime growth and have access to that amount of money to do other things at the same time. That's a game changer. That changes everything. Again, this is how I started. My players started saving money in an IBS policy, and the next thing you knew, they were borrowing it out of there to pay off student loan debts. The average student player that I had is generally out of debt in 5 to 6 years with about $50,000 sitting in their policy. That's not a bad plan. That's where it started. Saving money, we simply don't. And when we do, we save it in the wrong place. 90% of us put money into what I call the IRS prison. You can't access that money without taxes and without a penalty. Guys, the bottom line, if I'm paying taxes and I'm paying penalties, is it really my money? Don't think so. 45% of all qualified plans liquidate fully or partially prior to retirement. Now, the problem with this is a pre-2008 number. 2008, we had the real estate debacle. That number went to 70% after the market crashed. The problem with that number, it was before COVID. What do you think that is now? What if you were saving your money where it didn't incur a tax charge or a penalty for you to get the money? That's huge. Again, game changer. Banks simply control their money better than we do. If I can do these 5 things, I can literally be a bank. Now, I'm not talking about a brick and mortar bank. I'm just talking about the concept of being a bank. I mean, they do the same thing with their money as they tell us to do with ours, right? No, not at all. Banks have a cash flow, great leverage, great liquidity, collateralization, and a velocity of money. And we're not going to go into those because each one is a lesson in itself. But if you can do those 5 things, guys, you can be a bank. I want to talk about Bank of America for just a minute because they're so big. I want you to think about this because oftentimes we got stinking thinking. We don't think right. They collected $860 billion of deposits in 1 year. I'm going to round it off to $2 billion. They actually paid interest back to the account owners. After expenses, they made almost $45 billion. That's a successful year. Here's the crazy part. That profit margin was 2,600%. I'm assuming you didn't do quite that much last year. I'm assuming your profit margin was under 20%. You know, I had an old mentor that he literally told me, you know, we used to go to the banks and open accounts and we'd get a toaster because we knew we were going to get burned. Today, they just give you a sucker, you know, and that's ironically where I bank. You walk in and there is a bowl of suckers sitting there. 2019, 4 banks bought $57 million of life insurance cash value. Not death benefit, cash value. Why would they do that? What do they know that we refuse to learn? Do they know something we don't? Because all the talking people on, famous people on radios and TV shows and everything else are telling me it's a terrible place. But yet life insurance counts as a tier 1 asset, one of the safest assets the bank has, and they own billions of dollars. Chase 12, Wells Fargo 21 billion, Bank of America $22 billion, guys, of life insurance. Why is it good for them and not good for me? This is a question I ask all the time, and a lot of people used to know this, so I kind of quit asking it for a while. But I'm finding out that a lot of people have no clue that this question was ever asked. So here it is. Would you prefer to have $1 million today or a penny doubled every 30 days? And please understand, you can't flunk this, so just pick one and we'll run with it. Well, for those of you that picked the $1 million, congratulations, you're a millionaire. For those of you that gave up a penny doubled, you just gave up 5.3 mil. Now then, that is uninterrupted compound interest. I want you to understand what you're looking at. Okay? That's a lot of money in my book. Here's the problem. What if we stop the process on day 17? Congratulations, you have $655.36. That's a long way from a penny, but it's not even on the same planet as 5.3 mil. Do you see why you must not stop the compounding interest? So how do you stop it? Withdrawals, partially, fully, market volatility. How about the taxes you're going to pay? The fees you're going to pay? Oh, how about a pandemic popping up? Do you think that put a curveball into a lot of people's plans? The problem is we see that, but that's not the biggest problem. What's worse is we stop the process on day 17, so on day 18, we get to start over with a penny. That's a problem because now on day 30, you have $40.96. You don't have 5.3 mil. I want you to understand how devastating it is to stop this process, and yet you've never heard of it. If I can get uninterrupted compound interest for my life, I can win. And I can win bigger than you ever thought possible. Compound interest, most people don't get it. So let's take the penny over 30 years instead of 30 days, like say a retirement account. So let's see what happens when life happens. For 3 years, out of those 30 years, we don't make any money. Now, we didn't lose any money, so Warren Buffett is still happy. His number one rule is don't lose money. Number two rule is refer to rule number one. But you got to understand, if we just don't make money for 3 years out of those 30 years, our account just lost $671,000. Now, yeah, you can argue, yes, it depends on which years and stuff like that, but run with me here for a moment. What if I added a 2% management fee? No commission. Guys, there's people out here bragging right now on TV about not charging any commission. Okay? They don't have those products that they do, you know, that you do, they do better when you do better. Really? Would you rather pay 6% up front or 1 to 2% per year every year you own that? Do the math. Please understand they're playing word games with you and we fall for it. Again, it is our conditioned thinking. 2% management fee on this money makes 2.9 million. Got that? Million, almost 3. Pay 15% tax just on the growth? Yep. Cost you another $500,000. So do I have you sufficiently depressed at this point? There is a much better answer. What if all three happen at one time? We don't make money, we pay a fee, and we pay taxes. Welcome to Average America. Your balance is $51,368 when you think you have 5.3. What color sucker do you want? That's where we're headed. That's where we're at in America. People trying to figure out if they can retire or not. Conditioned thinking, it's okay to lose money. No, it's not. Don't lose money. Especially money that you can't lose. Why would you ever put a retirement account into something that can lose? And if you've been around, I mean, shucks, what happened to March of 2020? Did you lose any money? Our clients didn't lose a dime. How about 2008? Did you lose any money? To take more risk, to make more returns. Really. I'm not risking money I can't lose. We call that gambling where I come from. You call it whatever you want. Diversification will protect us. No, it didn't in 2008, and it sure didn't in 2020. If I remove risk, I don't even need diversification. There's another statement that y'all will struggle with. I do coach. I will engage you in a set of systematic and consistent behaviors that allow you to do something tomorrow that you can't do today. Of course, you have final say, but provides certainty. What if you knew what the future looked like financially and didn't have to guess? Increase productivity. What if you focused all your energy not on whether your account was going to make money, but whether or not your business was productive? Decrease your debt. I will wipe your debt out quicker than you ever thought possible. Decrease your risk. I want to remove every risk that I possibly can off that table. Increase your confidence. Absolutely. Increase cash flow. For the business owner, you have another different level, because now you can actually charge your business interest. Now create the paperwork and make sure you get with your accountant and those types of things. Create a paper trail. But you understand you have another benefit of doing that. And here's the best one: peace of mind. What if you just didn't have to worry? What if you knew what was going to happen? Please understand, if when those things happen, life just got better. Life just got better. Congratulations. I do hope you see that. I will tell you, I'm not a salesman. I'm not going to sell you anything, but I will coach you, and I'll coach you hard if you give me permission to do that. But the bottom line is, you don't know. Again, this is my personal information, and you are more than welcome to use it. I will meet you, talk to you, answer your questions. I'll answer any questions here. I don't want to get real deep into the weeds into your particular situation, because every situation is different, but there are some fundamentals that we keep. So please feel free to use that. And Keith, I'm going to try to come back to you.
We've got it. We've got it back. Hey,
Sweet.
Doug, interesting. And I was like you when I first heard it. I thought, is this guy going to go to jail? I'm just going to be honest. Is this guy going to go to jail?
Well, most people on here are old enough to remember Walt Disney.
Yeah.
Okay. And he used this in Anaheim.
Yeah.
Now, I spent a lot of time in Florida. I'm like Jim, but I was a football coach that didn't golf in Florida, so that was almost sacrilege. But the bottom line, this is not Disney World. This was Disneyland, and he used this to build Disneyland. Guys, it's been used that long. Okay.
Yeah, and anytime you introduce a new concept to people, their brains start whirling. But
I understand.
And I got my own personal story. So about 18 years ago, I heard of cryptocurrency, and I thought, these guys are going to jail. These guys are going to jail. And so a friend of mine said, hey, let's do this. $7.75 to buy this stuff called cryptocurrency. Okay, $34,123 yesterday. I'm not saying you do what Doug said or anything. I'm just saying keep your mind open to new ideas. Now, what you do with it, that'll be up to you.
That's up to you. That's right.
But one of the things we do here is we offer you an opportunity to at least listen to what some options are. Now, I'm up front. I said it. I said, is Doug going to jail? Because I don't want to go with him. And so, so this is a new concept. It's different. And so I had to think, I'm still thinking about what exactly does this mean? So that was my comment. Anybody else have a comment or a question? For
Crazy part is the concept isn't old or isn't new. It's old. It's not a concept that's promoted by an insurance company, or it's not their plan. It was literally from Nelson Nash, who was trying back in the early 80s, trying to run a logging forestry business when prime rates were 17, 18, and he was not a prime lender. So he's trying to run a $500,000 business on 23, 24% interest. And he didn't have an answer until he found it was actually a State Farm policy in his desk drawer that he bought from his brother-in-law just to get him out the door. And when that happened, he realized he could borrow that money at 6% instead of the 24. And like he said, you didn't need a forestry degree from Georgia to learn the difference between 6% and 24. Even football coaches got that one. Okay, so yeah. Any questions? I mean, I'd love to answer them.
Anyone?
Don't get too deep in the weeds.
David?
I'm just curious how you earn money doing this.
I'm paid by the company. Okay, I make a commission. Okay, you will never pay me, but just guys, I'm a licensed insurance agent. Okay, in multiple states, but I'm paid on that product. Okay, now then, I will tell you, to do this correctly, I've got to take a heck of a haircut in commissions to make sure the money shows up in your cash value. And that's where the money comes from. You know, the traditional life insurance policy that grandma and grandpa bought, there was no cash value in that thing for 5 years. I'm going to give you cash value in 30 days. That's got to come from somewhere. You got to understand, guys, I was a football coach. I got 2 pensions coming in. That's my retirement. Okay? Not this business. Although I do get paid, and I get paid well. But that's how, I mean, just off the products. But I don't wander into cryptocurrency. I don't go anywhere else except I will tell you right now, I don't even sell all the policies. I sell whole life policies that have guarantees. I got to have the guarantees so you can pay off your debt.
Adele, please.
Doug, is there an age limit on the insurance policy that you sell, sir?
Every company has their underwriting limits, and yes, there are, but that varies with the companies. Again, I only use mutual companies, and that is because I also want their dividends. If you're into a stock company, you're not going to get that dividend the stockholders are. But as a policy owner with a mutual company, I get those dividends. And so here's the great part, Adele. I will show you what it's going to do. And then all of a sudden the dividends come in and it does even better than I told you. Are you really upset about that? Never. Amazing product.
So then this is based on new purchase policies, not necessarily on existing policies.
There are always ways to get those done. Okay. I mean, there's 1035 exchanges, just like 1031 exchanges in real estate. You know, you can do those things. The nice part is and I don't want to get real deep into it, but the bottom line is, what if you say, well, hey, I'm too old and I can't do this. Well, you got grandkids? How much is insurance on a 3-year-old? You know, the rest of it's going to cash value, guys. That's money you can use today. In 30 days, you can learn. I will teach you how to borrow that out of there, pay it back, and you can use that money over and over and over and over and over again.
Anybody else got a question for Doug?
When you say borrow it and pay it back,
Okay,
so the cash value is earning interest.
Correct.
For me. And then when I borrow that out.
Absolutely.
To pay my student loan or whatever I'm using it for, then how am I putting it back?
Well, I want you, whatever your payments were for a student loan or for a car or whatever, from that point forward, when I get a balance, and I will show you how to track that, when I get a balance that can pay that bill off, I'm going to write them a check to pay it off. But now then, every monthly payment that I'm not making to them anymore comes back to me. Now then, and before we get there, because this is where I thought Rhoda was going. When I borrow money, is there going to be interest involved? Absolutely. So am I going to have to pay the insurance company some interest? Absolutely. But I want you to understand, another one of the lessons that I'll do for you, compound interest is not the same as amortized interest. And I will tell you, I flunked this lesson miserably the first time I heard it. $30,000 at 5% for 30 years. That's the same number as borrowing $30,000 at 5% for 30 years, right? No, they're not even close. And it's just the difference between compound and amortized interest. And we've never been taught that either. And so truly, even on a car for 5 years, so reduce it from 30 years to 5 years. Guys, that's $4,000 difference every time I do that in my favor. So now it doesn't become whether or not I want to borrow the money. It's how many times can I borrow the money, right? Because I'm going to make more money buying the same car that I bought beforehand. Another added thing that I give you is it's a literally list of your debts and when you can pay them off. And that's just that a lot of people don't do, but I ran into a guy out in Utah that had the software, and he was kind enough to sell it to me reasonably. And so I use that for every client that I have. So you literally get a personalized out of debt plan.
Anyone else with any questions? Mr. Fox.
Thank you. So, Mr. Doug, great presentation.
Thank you.
You spoke very well. My quick summary question on this is, you're using the concepts of what a life insurance retirement plan does, correct? I'm sorry, there's a lot of background noise. So overfunding a life insurance and then being able to borrow back from that. Is that correct?
Yeah, I really don't like the word overfunding. I wish Nelson would have never used that in his book because it's truly properly funding. But yes, it is money that you can borrow out and use. Yes, sir.
We've used this system for years, and so it does work. And you did a great job of explaining everything, Doug. I've enjoyed it. Thank you.
Thank you, ma'am.
Interestingly enough, for some high wealth individuals, this is a recommended process. Buy giant insurance, use it for funding stuff. They even use it for funding businesses, and then leave that as an asset. So once again, I'm not saying you do what Doug says. You can always do traditional stuff. Just keep your mind open as to what options may be available. So with that, Doug, hey, appreciate it. Hopefully
Absolutely.
Somebody got, maybe one of us had our eyes open. We might be able to think differently. I know I get ticked off every time I go to my bank and I think I got like 1/8 of an ounce of interest. So with that, what I'd like to do is say, hey, thank you guys. We'll see all you guys. I'm sorry, Rhoda.
I want to call attention to the fact that Linda B is here as a guest because she has a very interesting, eye-opening thing to talk about as well, and hopefully will be a speaker soon. But it is based around the fact that a Biden proposal that is probably going to come into enactment is to lower the age at which people are eligible to collect Medicare to age 60. And so she's talking about the ramifications of that possibility. Whatever your politics, if that should pass, that would be important to very many people with whom we deal. So
no problem. And once again, regardless of your politics, the number one bankruptcy reason in America is health issues. Number one.
Keith, let me go ahead and add that when you do this, when you use an IBS policy, that has no consequences on your Medicare payments or Social Security. Okay, for those of you who don't know, you're going to pay taxes on your Social Security. Yes, you are. Okay, but this does not count. Joe Biden, I've been told, I do not know this, but I've been told that Joe Biden actually owns 4 of these.
No problem. No problem.
That's the protection.
Well, thank all you guys. And once again, hey, we'll be discussing how we start increasing our referrals, increasing our business interaction. All right, with that, is there no one else got anything else to say? I will be seeing you guys next week. So I'll see all you guys next week. Doug, thank you so much.
Thank you. Thanks, Rhoda.
thank you.
Bye-bye.